Your life at every credit score level, 300 to 850, the brutal truth. 300 to 579, subprime. You are 23 years old and you don't know your credit score yet. You will learn it when you try to rent your first apartment without a co-signer. The application fee is $45, non-refundable. The landlord runs your credit. The number comes back, 487. You didn't know numbers could feel like a judgment. This one does. The landlord says the building requires a minimum score of 650. She says it apologetically, like she's delivering news about a terminal illness. She keeps your $45. You apply to 6 more apartments over 2 weeks. Each application costs between $35 and $50. You spend $265 learning that your number is too low everywhere that doesn't have bars on the windows. You find a place eventually. The deposit is 3 times the monthly rent. First month, last month, security deposit. $4,350 up front for a 1-bedroom that smells like cigarettes and someone else's choices. The lease says no pets. The carpet suggests the previous tenant disagreed. Your credit score is low because of a medical bill from when you were 19. You had insurance. The insurance didn't cover the anesthesiologist. You didn't know the anesthesiologist was out of network. Nobody knows the anesthesiologist is out of network until the bill arrives 6 weeks later. $2,847. You were working part-time at Target. You made $11.50 an hour. You called the billing department. They set up a payment plan, $200 a month. You paid it for 4 months. Then your car broke down. The repair was $400. You had $340 in your checking account. You stopped paying the medical bill. The hospital sent letters. Then a collection agency sent letters. Then the collection agency sent different letters. Then they stopped sending letters and started reporting to the credit bureaus. That was 3 years ago. The debt is still there. It will be there for 4 more years. 7 years total. You are 23. The number will follow you until you are 26. You need a car. Your current car is the one that broke down. You sold it to a junkyard for $280. You take the bus to work now. The commute is 74 minutes each way. You could walk to a closer job, but the closer jobs pay $9.25 an hour and you can't go backward. The car dealership is bright, fluorescent. The salesman's name is Derek. He has very white teeth. He asks what you're looking for. You say reliable. He hears cheap. You fill out a credit application. He disappears into an office. He's gone for 11 minutes. When he comes back, his smile is different, tighter. We can definitely work with you, he says. This is not good news. He shows you 3 cars. They are all between 11 and 14 years old. They all have over 140,000 miles. The interest rate is 18.9%. You do the math in the parking lot on your phone. A $9,200 car becomes $14,670 over 5 years. You sign the paperwork. You drive off the lot in a 2011 Nissan Altima with a cracked bumper and a check engine light that Derek assured you is just a sensor. It is not just a sensor. You will learn this in 8 months when the transmission fails on the highway and the repair costs more than the car is worth. You will still owe $7,100 on the loan, $580 to $669. Fair. You are 27 now. Your credit score is 612. This happened because you paid off the car loan, not the original car, the car after that. The one you bought after the Nissan was towed to the same junkyard where you sold your first car. You've never missed a rent payment in 4 years. Rent is $1,150 a month. Your landlord has never reported a single payment to the credit bureaus. Paying rent on time does not help your score. Missing rent destroys it. The system is not symmetrical. You have 2 credit cards. Both have a $500 limit. You open them to build credit. A website told you to keep your utilization below 30%. You keep it at 28%. You pay the balance in full every month. The interest rate on both cards is 24.99%. You will never pay this rate because you will never carry a balance because you have seen what happens to people who carry balances. Your coworker carries a balance. She makes the same salary as you. She has $8,400 in credit card debt across 3 cards. She pays $340 a month. $297 of that is interest. She has been paying for 19 months. Her balance is $8,980. She will be paying for 6 more years at this rate. She doesn't talk about it. You only know because she mentioned it once in the break room, casually, the way someone mentions traffic. I need to pick up an extra shift. Credit cards are killing me. She said it while microwaving leftovers. Then she went back to her desk. You apply for an apartment in a better neighborhood. The building has a gym, a doorman, parking. The rent is $1,625 a month. You make $52,000 a year now. You got promoted. The promotion came with a $7,000 raise and the knowledge that your manager makes $76,000 doing the same job you do. Your credit score is high enough. Barely. The building requires 640, you have 612. You offer to pay 2 months deposit. The leasing agent makes a call, comes back. We can make an exception if you can provide proof of employment and last 3 pay stubs. You provide them. You get the apartment. The deposit is $3,250. Still higher than someone with a 720 would pay. They would pay 1 month. You pay 2. The difference is 1,625. This is the cost of a number. 670 to 739. Good. You are 31. Your credit score is 701. You got here by doing everything correctly for 4 consecutive years. No missed payments, no collections, 3 credit cards, all under 20% utilization. You paid off your car. You own a 2016 Honda Civic. It is not exciting. It is reliable. Reliability is expensive until you have it. Then it's invisible. You're getting married. Your partner has a credit score of 680. Combined, you are good enough. You apply for a mortgage. The process takes 47 days and requires 86 pages of documentation. Pay stubs, bank statements, tax returns, a letter explaining a $600 charge from 2019 that the underwriter flagged as unusual. The charge was a flight to your grandmother's funeral. You write this in the letter. You feel strange writing it. The underwriter accepts the explanation. You never meet the underwriter. You don't know their name. They know everything about you. You're approved for a loan, $340,000 at 4.1% interest. The house costs $360,000. You have $28,000 saved for the down payment. The minimum down payment is $18,000. You put down $25,000. The remaining $3,000 stays in your savings account. It is the largest amount of money you've ever had in savings. The mortgage payment is $1,147 a month. This is more than your rent. The difference is ownership, equity, the knowledge that in 30 years you will own something. In 30 years you will be 61. This math does not comfort you the way it's supposed to. Your interest rate is 4.1%. Your coworker bought a house 6 months earlier. Same price range. His credit score was 780. His interest rate is 3.3%. Over 30 years, he will pay $67,000 less than you for the same amount of money borrowed. The difference is a number. His number was higher, 740 to 799. Very good. You are 36. Your credit score is 762. You got here by making every payment on time for 9 years. The mortgage, the credit cards, the auto loan you took out when the Honda hit 140,000 miles, and you bought a certified pre-owned SUV because you have 2 children now and children require space. The loan officer calls you an ideal borrower. This is the first time anyone in the financial system has called you ideal. The interest rate on your new car loan is 3.2%. You financed $28,000. The monthly payment is $502. You will pay $1,890 in interest over 5 years. Your neighbor financed the same amount. His credit score is 615. His interest rate is 9.7%. He will pay $6,340 in interest. He makes less money than you. He will pay more for the same car. This is how the system works. You refinance your mortgage. Your credit score qualifies you for better rates now. You go from 4.1% to 2.9%. Your monthly payment drops by $287. Over the remaining life of the loan, this saves you $74,000. You get this discount for having a higher number. The number went up because you paid your bills. You paid your bills because you had money. You had money because you got jobs that paid money. The loop is not accessible from the bottom. You apply for a credit card with rewards, travel points, cashback. The card has no annual fee for people with your credit score. The card you're replacing had a $95 annual fee. That card gave you 1% cashback. This card gives you 2.5% cash back. On $40,000 in annual spending, this is a difference of $600 a year. Your credit limit on the new card is $24,000. You do not need to borrow $24,000. The limit exists because you don't need it. This is the irony that no longer surprises you. When you needed credit, you couldn't get it. Now that you don't need it, it arrives in the mail unsolicited. Pre-approved offers, twice a week. You shred them. 800 to 850. Exceptional. You are 44. Your credit score is 823. You don't know exactly when it crossed 800. You check it once a year now, the way you check your tire pressure. Maintenance. Confirmation that systems are functioning. You are refinancing again. Not because you need to, because you can. Interest rates dropped. Your score qualifies you for the lowest tier, 2.3%. Your mortgage balance is $287,000. The refinance will save you $340 a month. You use a mortgage calculator late at night. Over the remaining 22 years of the loan, this saves you $89,760. You got a number. The number saved you money you didn't know you were losing. The loan officer processes your application in 11 days. No letters explaining charges, no additional documentation. Your score is high enough that you are no longer a risk. You are a preferred customer. The irony sits in your chest like something heavy. You are preferred now because you have money. You have money now partly because you've been preferred. The gap between 487 and 823 is not just points. It's $4,350 in move-in deposits you didn't have to pay. It's $67,000 in mortgage interest you didn't owe. It's $6,340 in car loan interest that stayed in your account. It's the apartment you got without 3 months rent up front. The car you bought at 3.2% instead of 18.9%. The credit card that pays you to use it instead of charging you to hold it. Your daughter is 16. She asks you about credit. You tell her to pay everything on time, never carry a balance, keep utilization low. She nods. She doesn't understand yet that these rules only work if you have money to follow them. You don't say this part, you say, build it early, protect it. It matters more than it should. She asks what your credit score is. You tell her. She says, that's good, right? You say yes. You don't tell her about the medical bill when you were 19, the Nissan with the transmission failure, the $45 application fees, the 2-month deposits. You don't tell her that a 487 and an 823 are separated by money and time and luck and a system that charges the most to those who have the least. You don't tell her that your 823 is built on years of not getting sick at the wrong time, not losing a job in the wrong month, not having an emergency exceed your savings. You just tell her to pay her bills on time. This is true. It is not complete. But it's what fits in a conversation in the kitchen on a Wednesday evening while she's doing homework and you're unloading the dishwasher in a house you were able to buy because your number was high enough. Somewhere right now, someone is 23 years old. They're filling out a rental application. They don't know their credit score yet. The landlord is running the report. The number is coming back. It's 512. The landlord keeps the $45. The system is learning their name. The loop is starting again. The number doesn't measure character. It measures access to money at a point in time when money was needed. It measures whether you got sick, whether your car broke down, whether your hours got cut, whether the anesthesiologist was in network. And then it measures whether you recovered. And then it decides what you pay for everything else. You are 44, your score is 823, you have very good credit, you also have a scar from when you had very bad credit. The scar is invisible, it's financial. It's the money you paid that someone with an 823 would not have paid. It's the years you spent climbing from 487 to 823 while interest compounded against you. The number is on your credit report, the cost is not. That part lives somewhere else, in the spreadsheets you kept, the sacrifices you made, the apartments you didn't get, the consolidation loans, the balance transfers, the 0% promotional periods that bought you time. You refinance your mortgage at 2.3%. The process takes 9 days. The loan officer congratulates you on your excellent credit. You say thank you. You sign the paperwork. You save $89,760 over 22 years. You don't tell her that the system charged you first, then rewarded you later, and called it fair. The machine doesn't stop. It just calculates new numbers.